Asia markets are mixed as investors await the Federal Reserve's decision. Amazon is introducing a mandatory 5-day in-office work policy and will examine Russia's poverty rate amid its decision to double military spending. Hello, I'm Efnan Han with the latest business and finance news here on TRT World. Asian markets opened mixed as investors await key rate decisions from the Federal Reserve and Indonesia's central bank. While Japan's Nikkei index showed signs of optimism, Australia and Taiwan experienced slight declines. With economic data and central bank policies in focus, market participants remain cautious. The Federal Reserve's rate decision is expected to set the tone for global markets. The current U.S. policy rate could influence Asian markets, especially those with significant U.S. trade exposure. Any rate changes could impact global borrowing costs, affecting everything from consumer spending to corporate investment. Japan's Nikkei 225 saw a 0.74% rise, while the Topix gained 0.48%, showing optimism among Japanese investors. Australia's S&P ASX 200 dipped slightly, snapping its 4-day winning streak after hitting a record high on Tuesday. Mainland China's CSI 300 was nearly flat, remaining cautious after hitting its lowest level since January of 2019. Meanwhile, Indonesia's central bank is set to announce its rate decision today, with its policy rate at the highest level since 2016. Inflation in Indonesia has cooled within the central bank's target of 1.5 to 3.5%. Market watchers will closely monitor the decision for hints on future monetary policy direction in the region. Let's get more on this now with Naeem Aslam. He is the Zay Capital Markets Chief Investment Officer and joins me live now from London. Thank you for being with us on the program. So how do you expect the Federal Reserve's rate decision to influence Asian markets, particularly in countries that have high U.S. trade exposure?
Sure, thanks for having me. I think you've answered some parts of that particular question in your opening statement, which is a very interesting question, because this is a decision which traders and investors have been waiting for since the beginning of this particular year, because there's been anticipation that the inflation is moving down, and when the Federal Reserve is going to cut the interest rate, what is going to be the magnitude of those particular interest rates, and what would be the follow-on trajectory for the monetary policy for the Federal Reserve, especially in relation to emerging markets where there is a huge amount of trade exposure. So I think we have to look at things from two different perspectives. Number one is where the market is sitting and what the speculators are thinking. And number two is a reality check, which we're going to get tomorrow in terms of the actual decision. Now, to answer your question precisely in relation to the Asian exposure or the emerging market exposure, markets have very much anticipated an interest rate cut of 25 basis points. And it is really interesting that you actually asked that particular question, because the Federal Reserve, yes, they are very much responsible for the price stability, for the unemployment rate and the economy over in the United States, but they are also responsible to a larger extent in terms of the stability of the dollar on the global platform. So if they cut the interest rate by 50 basis points, which speculators are very much anticipating, and we have seen massive move in the gold price on the back of that, then of course, this is going to be a shock for the emerging markets, especially for the Asian markets, the central banks, based on that, how they will have to react to their own monetary policy. But if the interest rate cut is only going to be 25 basis points, I think with that in mind, a lot of that action and the reaction is already baked into the price.
Indeed, looking at Japan's Nikkei and Topix, they have shown gains. What do you make of this momentum despite mixed global economic signals?
But look, market is addicted to one thing, and that is dovish monetary policy. Bulls love this particular narrative when it is adopted by the Federal Reserve. So, of course, the equity market, the path of the least resistance is very much skewed to the upside. in relation to that. So I think whether there is an interest rate cut of 25, whether there's an interest rate of a 50 basis point, the trajectory of the interest rate cuts in the future for the rest of the year, it's still skewed to the downside. So that means there'll be more interest rate cut, perhaps 50, perhaps 75 or 100. That is a big range that we have in terms of the market. So that means that the equity market, not only in the United States, but also in Asia and around the world, because they're so interlinked, we will see the path of least resistance due to the upside, but only once the dust has settled. Because 25 basis point interest rate cut from the Federal Reserve may bring disappointment among certain investors, which will bring volatility in the market.
All right, Naeem Aslam, it's always a pleasure speaking to you. Thank you for your analysis. And it's now time for a quick look at some other leading business stories from around the globe. Japan has reported a trade deficit for the second consecutive month as exports continued to cool in August. Shipments abroad rose 5.6% from a year ago to $59 billion, decelerating from the 10.2% growth in the previous month. Imports were also up 2.3% during the same period, resulting in a trade deficit of $4.9 billion. Chevron CEO Mike Wirth has criticized the Biden administration's natural gas policies, saying they raise energy costs and threaten U.S. energy security. He claimed the administration's freeze on new LNG export permits undermines efforts to lower emissions while increasing fuel prices. Wirth also emphasizes the role of Permian natural gas in powering the rapid growth of artificial intelligence. Investment company BlackRock has teamed up with Microsoft to launch a more than $30 billion fund to invest in artificial intelligence infrastructure. They plan to expand their data centers and energy projects using AI technology. Analysts say the financial partnership would be the biggest investment vehicle ever raised on Wall Street. And plastic container brand Tupperware has filed for bankruptcy protection as demand for its food storage containers continued to decline. The company has been struggling for years, briefly bouncing back during a short-lived pandemic boost where increased home cooking drove up demand for its products. The company listed between $500 million to $1 billion in estimated assets compared to $1 billion to $10 billion in liabilities. And still to come in business news, former President Donald Trump launches his own cryptocurrency just weeks ahead of the U.S. elections. Details on that and more after a short break. Welcome back. And UK inflation stood at 2.2% in August, meeting analyst expectations and remaining unchanged from July. This figure aligns with the Bank of England's target rate, last recorded at 2% in May and June. The Bank of England will announce its monetary policy decision on Thursday, with traders expecting rates to remain steady. Recent market bets for a 25 basis point rate cut doubled to 40% ahead of the U.S. Federal Reserve meeting. Amazon has announced a major shift in company policy, shaking up the corporate world. Starting January 2nd, 2025, the U.S. tech giant will implement a mandatory 5-day return-to-office policy, a significant change from their current hybrid model. Malik Fuda reports.
The era of working from home, could it really be over? When the coronavirus pandemic hit the world in 2019, many businesses had moved quickly to remote working, making it the new gold standard. The percentage of employees working from home, also known as WFH, skyrocketed to 54% in 2020, a sharp increase from just 4% in 2019. But as the world returns to pre-pandemic days, so do businesses. A growing number of companies have recently scrapped WFH policies, including Meta, Dell, Walmart, PwC, Starbucks, and Disney. Now, Amazon has joined the list, calling its employees back to the office. In a letter to employees, Amazon CEO Andy Jassy addressed the change.
Before the pandemic, it was not a given that folks could work remotely 2 days a week, and that will also be true moving forward. Our expectation is that people will be in the office outside of extenuating circumstances.
But why this push for the office? For Amazon, the goal is clear: boost collaboration, spark innovation, and drive productivity. Stanford University study revealed many employees are less productive from home. and office work encourages collaboration and learning from colleagues, something Amazon hopes to see similar gains with this new policy. But not all employees are on board. Many are resisting the move to full-time office work. In May of last year, workers at Amazon's Seattle headquarters staged a walkout protesting a return to office mandate. Fully remote work positions are quickly becoming a thing of the past. A recent survey from Resume Builder revealed that 9 in 10 companies are expected to have returned to the office by 2025. But the same report also highlights that 8 in 10 employers lost talented employees due to return to office mandates. And while Amazon is betting on in-person work, the debate over the future of work continues across industries. So will the return to office trend lead to a more connected and productive workforce, or will it be a step back from the flexibility many have grown accustomed to? Malik Fuda, TRT World.
Let's now cross to Sydney and speak to Mark Humphrey Jenner. He's an associate professor of finance at SW Business School. Thank you so much for being with us on the program. So productivity and collaboration, this is what they want to advance in. Is Amazon's return to office policy going to make that happen?
Firstly, thanks for having me. And the jury's still out on whether actually returning to office is really genuinely going to result in more productivity. I know that companies like Nike and Amazon have said this. However, Nike was often doing, for example, its return to office on the back of a rather large stock decline. And there's reports that CEOs, for example, like with Nike, but other companies as well, have been trying to scapegoat working from home as the reason for their poor productivity. So, for example, there's a research study by Yuyi Ding and Mark Ma out of the University of Pittsburgh. And they highlight that the return to office mandates are often coming after poor performance, and they often aren't associated with an improvement in things like productivity, and they're associated with a worsening in perceptions of work-life balance and a worsening in the perceptions of corporate culture and a lower level of workplace satisfaction. So it's not entirely clear that workers will necessarily be more productive when they return to the office. There was also a large survey by Atlassian, the major tech firm, but they asked a sample of Fortune 500 CEOs about things like working from home and distributed workforces. In their survey, a full 100% of all CEOs in their survey highlighted that work is distributed, 99% of them thought that work would become more distributed in the future, and executives were 3 times more likely to say that why and how people are working is more important than where they are working. And in a survey by Deloitte, 59% of Gen Z and millennials that they surveyed indicated that working from home and remote work was a key factor that they considered in their job search, which means that if one is mandating a return to the office, then one does risk losing out on talented individuals. And perhaps the issue is more how you are managing the workforce more than exactly where they are working. And it's not entirely clear this is going to be a magic solution for Amazon improving productivity.
Indeed. I mean, you just laid out a whole bunch of research that has been conducted on how productive people have been, especially during the pandemic onwards, while working on their own schedule. Do you think that companies as big as Amazon need to figure out a different model moving forward? Is this happening because there's a generational gap between the workforce and the people leading the company?
So there's several factors that are ongoing here. With the pandemic, there could have been a sharp structural shift in employees' expectations. So, for example, before the pandemic, people didn't really have the option to work from home. They weren't really allowed to beforehand. But then they got a taste for working from home during the pandemic, and they found out they actually preferred that model. They no longer needed to commute to the workforce. They could more easily deal with picking up and dropping off children, that type of thing. So it became a lot more flexible. It's not without its downsides, in that there are also some perceptions that work is creeping more and more into people's personal lives, potentially leading to an increase in the perceptions of overworking. But nevertheless, there's been a structural shift there. Furthermore, with younger generations, many of whom have actually gone to school remotely because they had to during the pandemic, there's been a greater acceptance of working from home. Many of the older bosses and supervisors, however, do fear that many of the workers working from home are perhaps shirking, or they're watching Netflix rather than working, or they're not really being productive. So really one needs to consider, are there benefits of working from home? Are there costs for working from home? And how does one get access to the benefits while mitigating the costs? So Atlassian, for example, had some solutions. One solution was trying to encourage employees to time block their calendars around key tasks they needed to achieve and focusing on those key tasks and objectives. And then getting workers to evaluate their progress toward those objectives on a daily basis. So you both kept track of what you needed to achieve and whether you were achieving it.
Right.
Perhaps a greater way of benchmarking and a greater way of encouraging employees to really target those goals can help get the most out of working from home.
Indeed. Professor Mark Humphrey Jenner, thank you so much for being with us here on the program. It was a pleasure speaking to you.
Thanks for having me. Great being with you.
Moving on now, and in a country that's almost doubled its military spending this year, at least 13 million Russians live below the poverty line, relying on charities for basic staples. This figure has been steadily falling from over 40 million people in 2000, but many say this success results from a statistics trick. Dasha Chernyshova visited one of the charities that helps the poor and the homeless.
This is The Night Bus, a project providing hot meals to anyone in need in Moscow and the second largest city of St. Petersburg. Volunteers are gathering, and it will drive to its first stop to feed the neediest who are already lining up for a plate of soup, hot tea and gingerbreads.
I'm here to eat because I have no money, not even a kopeyka.
This is one of the most decent organizations. They always feed well, others worse. Thank God somebody helps everybody a little.
I had one job for a week. I was fooled. I had another one. They did not pay either. So I have to go to court, and that requires a lot of money.
The Night Bus is one of many projects that Noshlezhka charity has to help the poor and the homeless. The area of services also includes legal and social consultations for those who cannot afford them or have no phones, shower, clothes and so on.
Latest official statistics from 2023 show that 13.5 million people live below the poverty line in Russia. That's 9.3% of the population, a high figure, but an improvement from 20 years ago when an estimated 29% fell into the bracket.
Despite official statistics suggesting falling poverty rates, the demand for free food remains.
In our work, especially in recent years, we see a significant increase in the number of requests. In some of our projects, the number of our clients has increased up by 80%. All projects run at the maximum capacity, and as we see an increase in requests, it becomes more difficult for us to come to the aid of everyone who is in need.
Before 2021, poverty definition directly correlated with food prices. Now it is defined as the level of median per capita income, which was $150 or less last year. So many society commentators point to the fact that there are tens of thousands of people, including the elderly, who have to rely on charities while being unable to afford basic staples and medicine, but they are not defined as poor. Lowering poverty rate to below 7% by 2030 is seen as one of the burning issues facing modern Russia. But these people question whether that goal is actually achievable. Dasha Chernyshova, TRT World, Moscow.
Let's get more now from political analyst Sonia van den Ende, who joins me live from the Russian capital, Moscow. Thank you for being with us on the program. So given that the official poverty figures have declined there in Russia, how reliable are these statistics, especially with changes in how poverty is now being defined in the country?
Okay, first of all, thank you for having me. Well, I think the poverty rate is quite good. It's declining. Even IMF economists, what I just heard and read, they have no idea of what is really going on in Russia. This is what's known from their private conversations. So they have basically zero visibility what is going on in Russia. And the number of Russians living below the poverty line in 2023 dropped to 13.5 million from 14.3 million a year earlier. So this is very good. This was a Rosstat statistic. And with the poverty rate falling from 9.3% to 9.8%. So In 2023, Russia's national income per capita reached approximately around $14,500, and that even they take over now, it's what is known the largest economy in Europe, Germany. They now on the 5th place, Russia. So it's very good actually. And also there were a lot of business investments, like Russia's successor to McDonald's. We know all that it's closed since the start of the special military operations, or a little bit later actually. They're now going on foreign markets like China, and it's gone all wild through all the country. So that's also a big advantage. And Russia is expecting to grow its outlets by 1,000 in the whole country by 2026. Mm-hmm. And also Turkey is a very good business association, also increase the levels of trade and so on. So I think it will reflect on the people inside Russia, the poverty inside Russia. And of course, there's poverty everywhere in every country, mm-hmm. but the statistics shows that it's not increasing, but decreasing.
So there definitely is some progress being made, but despite those reported reductions in poverty rates, why do charities still see an 80% increase in demand for basic services like food and shelter?
Well, I investigated 2 charities in the country. There's a very big one, is Russian Food Bank, we can call it like that. And the other one is Nochaleshka. And they see not a real increase in homeless people. Because, you can compare Russia with the US these days, and especially Europe, what I said before. But these statistics of these food banks and shelter, they give shelter as well, is actually a little bit the same as it was last year. Of course, there needs to be an improvement. And we must not forget that Russia is geographically a very large country. So, of course, you have poverty in every country. But I think the Russian government is doing its best to decrease the poverty line. As I said before, these 2 they are the biggest one in the countries, like the one in St. Petersburg. It said on their website that this year only 700 people got shelter. So, I mean, that's not a real big figure if you think that St. Petersburg has around 5 million to 6 million inhabitants. So I think it's pretty the same. Maybe it's even declining.
Right. There is a goal, though, that they want to lower poverty lines to below 7% by 2030. How achievable do you think this goal is? Or do you think that this is an ambitious target that overlooks the realities that millions of people face today?
Well, it's a big challenge, of course. And I think Russia is doing its utmost best to get this figure out in 2030. Of course, we have now the special operations. We have the threat from Western countries here in Russia. This is also very bad, and it's very insecure situation. And I think it's not only for Russia, but for the rest of the world. As I said before, Europe is also declining. So this is a very big problem, like in Germany, Netherlands, and so on. But I think despite that we have the special military operation, and despite that Western countries are threatening actually Russia at the moment, the economy here in Russia is, in my opinion, because I'm living in Moscow now since more than 2 years,
right.
It's stable. So this is, but let's hope they will get out these figures in 2030, and let's hope that the world will be also a stable place. Then, of course, the economy will be stable as well.
Indeed. Sonia van den Ende, thank you so much for being with us here on the Business News. I appreciate your analysis.
Thank you very much. Have a nice day. Bye.
Well, it's been a tumultuous month for Donald Trump in the run-up to the U.S. presidential elections. He's debated his Democratic rival Kamala Harris, dodged his second assassination attempt, and is now launching his new cryptocurrency exchange. Ende has the story.
Cryptocurrencies are once again in the spotlight after former US President Donald Trump announced during a live stream on X his latest business venture, cryptocurrencies. World Liberty Financial, his new cryptocurrency exchange, launched just weeks before the US elections. The new exchange will offer users the opportunity to buy and sell cryptocurrencies like Bitcoin and Ethereum. Even before the launch of his new exchange, Trump has been vocal about the need to expand the crypto space.
I'm laying out my plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world, and we'll get it done.
The former president views cryptocurrencies as a fledgling business and an industry that has the chance to be really special. Though Trump is thinking with a business mind, some experts say it may be a strategy to capture voters in the crypto space. And in the past, he's criticized Vice President Kamala Harris over her party's increased regulation in the crypto space.
We'll keep their hands off Bitcoin. They're going to keep their hands off crypto. They're going to let it grow. We're going to let it grow.
A new poll by crypto exchange Gemini found that 73% of crypto owners in the US plan to look at a presidential candidate's position on crypto. So with elections just around the corner in November and Trump's new business adventure underway, the polls will show if his investment will pay off. Emre Boz, TRT World.
And that's all your business news for now. Thank you so much for joining me here in our studio. The Newsmakers is up next.